In fact, on that note, let me also welcome on board Ashwini Agarwal, founder at Demeter Advisors, joining in the show right now. Ashwini, hi, morning. Good to have you on the show. We finally scaled it to that all-time high. And you know the thing that Nikunj and I were just talking about, that this time around the participation is really coming from the DIIs. Who's feeling the FOMO? That's the FI fraternity, because they didn't participate as much in this last lap of the rally from December 1, 2022, when we last scaled that all-time high up until today. Wanted to understand, do you think they're going to only play catch up and we will have a consecutive buy now from the FIIs?
Morning, Aisha. Thank you for having me here. It's very difficult to predict FII flows because they are, driven by a whole host of factors, including inflows into ETFs, which are beyond, which is not a conscious decision on part of the ETF manager. I mean, if the ETF flow receives money, they will invest. So I can't predict foreign flows. But what I will say is that India is right now the center of attention of the world. I mean, Prime Minister Modi was in the United States last week. You have the Goldman Sachs board visiting India this week. You had all the right noises coming out of Prime Minister Modi's visit to the US last week, including new manufacturing commitments from various global leaders. And prior to that, in early April, we had Tim Cook visiting India, and similar sort of frenzy, or I would say attention, was created. So the point that I'm making is that India is certainly an attention of the world, and there are multiple drivers to that. One is that we are growing quite well and don't have any macroeconomic imbalances, unlike several other markets in the world. Number two is that it is getting to be a bipolar or a multipolar world, and in a multipolar world, India seems to find itself positioned quite well from a geopolitical perspective, which also makes it easier for firms to making investment decisions as to where they need to go next or where they want to go next. And last but not the least, you have this huge domestic population which is going to be a source of consumption for the next 30, 40, 50 years. So, if global companies are coming to India, they're not only coming to India because it can be a good global sourcing point for them, but also because it's a very large domestic market already, and in the making of a very large market. So, for all the right reasons, we are receiving a lot of attention. So what that does to FI flows, I have no idea. But yes, it's nice to be where we are.
But Ashwini, you think that at least the texture and the nature of the rally will broaden a little bit? Because what we've seen is from the last time peak up until now, it's been a very narrow market. Very few hands have actually done the heavy lifting, whereas your traditional heavyweights, the likes of an HDFC Bank, Reliance, TCS, Infosys, etc., have been very much on the sidelines.
So you're right, Aisha, absolutely. My sense is that the banking sector should be the next big mover from here. Simple reason is that the operating environment for them is about as good as it gets. Credit growth is picking up, spreads are stable. The fear about tightness and liquidity is probably behind us, and the credit cycle continues to be extremely benign. And valuations are nowhere close to all-time peaks. The only question that investors have in their minds is that what is the disruption that fintech can cause to the traditional banks, etc. And here, at least for the private sector banks, most of them have brought in fintech into their own operations in a big way. So, hopefully the disruption is going to be fairly limited. So my point is that I think banks look very good. On IT that you spoke about, my sense is that the fears around the June quarter is probably well priced. And once the June quarter results are delivered, then you probably see things coming back to normal and these stocks participating. Simple argument here is that the US economy seems to be doing a lot better than what most of us were thinking. Rates being as high as they are in the US, there seems to be no slowdown. And I think the IT spending, which is kind of bit on the little on the slower side, has got reasonably priced into stocks at this point, especially for the larger cap names. So let's see what the June quarter results deliver. I could be wrong, but my sense is that a lot of the bad news is already priced in. So that gives us room for upside there as well from a medium-term perspective.
Ashwini, it's also been, undeniable the way the broader market has scaled up of late. Do you believe that there is still quite a bit of potential and more legs to go when it comes to the rally within the mid and the small caps as well?
Earlier Nikunj was talking about how valuations have not become stratospheric yet, and I tend to agree with him. And I think the manufacturing revival that you're seeing after almost a decade of going nowhere in India, and the kind of benign tailwinds you are seeing from transportation cost, energy cost, raw material costs are still not fully baked into earnings expectations. And even on the earnings expectations that we have, valuations are not excessive. It's nowhere close to the valuations that we saw towards the end of calendar 2017 or probably in 2007, 2008. So yes, there is room for upside in smaller names. You have to pick and choose as to what you like and where you wish to invest, because each one of us has our own biases in terms of what we like and what we don't. But the simple point is that smaller companies are still not expensive, notwithstanding the kind of participation we've seen.
So from the universe of, stocks, Ashwini, where is it that you think, things are still fairly valued, not overripe, and there's still money to be made? What would be your overweight?
So I continue to like pharma a lot. It's been my favorite for a while. And I think that pharma companies, while they have done well over the last 3 or 4 months, will continue to deliver very solid returns, because a lot of these stocks, especially in the mid cap and small cap space, are quite inexpensive. So that's one area that I like. I like the whole auto value chain, components and so on, where I think that you have a significant manufacturing capability at a global scale. So not only are you serving global players in India, but you are well positioned to serve the rest of the world. And raw material prices being benign, energy prices being benign, transportation costs coming off should be positive for their margins. So that's the other area where I'm reasonably positive. Third is, like alluded to, the banks and IT, I continue to be fairly positive about, but there I would favor the private large cap names. And last but not the least, individual bottom-up stories in small cap space, which are either the disruptors or are, going to grow for the next 5, 10, 15 years. I mean, that's the place to be.
Ashwini, how are you looking to play this very promising manufacturing theme that a lot of experts are bullish on?
Auto components primarily, as at this point. I think the defense valuations are very, very high in my personal opinion. So the defense and railway story, has played out. The order books are still swelling, and who knows, I could be wrong looking at valuations, but a lot of the execution has to happen. And when the government of India or PSU world is your primary buyer, we've seen in the past that disappointments, happen because execution doesn't keep pace. So, this time could be different. But defense and railway oriented theme, I think, has played itself out. So I'm playing it through a little bit in the chemical space, where input costs are now softening. So you've got to look at downstream chemicals rather than upstream chemicals. And I'm looking to play it through the auto component space.
Ashwini, what could spoil the party right now for India?
Oh, who knows? The fact is that we've had a nice run. The fact is that markets never move up in a straight line. So you are overdue a 5-7% type of a correction, maybe even 10%. So who knows? The triggers are always visible only in hindsight. But from a time and the length of the rally perspective, you could see a 3-4% upside, but we are overdue a correction, and the reasons could come out from global developments. They could come out from somewhere else. I don't know. Who knows? I mean, Aisha, very difficult to comment on that. I think there was some fear that poor rains and poor monsoons might lead to rural income remaining subdued. So let's see how that theme develops. And of course, over the next few months, we'll start to shift our focus on politics and the big event in the middle of next year. The consensus forecast at this point in time, obviously, is that no danger to the BJP coming back. But if that narrative starts to look a little bit uncertain, that could be the other reason that might take the sheen off the markets. Who knows? There could be multiple things.
Ashwini, your struggle to scout out party poopers only gives me more confidence on the India story and, of course, the market strength as well. But anyway, that aside, the one underperforming pocket has also been IT. While, it's not really an apple-to-apple comparison, but if you look at some of the tech-heavy NASDAQ names, for instance, they've scaled up a whole lot. And of course, now in US, the story is around AI. That's where the narrative is, and that's where all of us are headed in terms of, technology transition. Wanted to understand whether the worst for Indian IT is now behind us, and would you recommend now nibbling into this sector?
So, Aisha had alluded to this earlier in our conversation that, the June quarter results are going to be quite telling. My personal view is that a lot of the bad news is now priced into the underperformance already. I think growth rates are not that exciting for sure, but the valuations are quite appealing, and the free cash flow and dividend yields are quite supportive. So I don't see a lot of downside from here for stocks. Will we see a lot of upside? It depends upon how the June quarter plays out and what companies say about the rest of the year. One area which is still kind of bothering me a little bit is potentially a stronger INR versus the USD. So whether it's a weaker USD or a stronger INR, I mean, let's see how that narrative plays out. But a lot of the IT services companies have their earnings significantly pegged to the US dollar, and that could be a risk that's still not priced in. So let's see. That's the only thing that I'm really worried about. The slow growth is not something that I'm so worried about. And I think IT stocks will bottom out once the June quarter earnings are out of the way. I haven't made up my mind. Should we buy into the results, going into the results, or should we wait for the results? I'm still struggling with that. But yes, I'm paying a lot of attention to that space right now.
All right, Ashwini. Thank you. Thank you for joining us.